How's everyone doing? Great session, D-Man. Love it as always. Yeah, the three amigos are coming up in 30 minutes. That's always a pretty fun session. A little banter, as you can probably imagine. But then also just, questions and whatnot. I'm sure D-Man's going to bring up the fact that he got like one more 100%er than me. And I'm gonna have to hear about it again. But I'm working on another one. I don't know if that would make us tied. He probably has a couple that he just sort of is not sharing. So, but we'll see. We'll see. We'll have to have a final tally. Yes, Dan, I am doing the zero DTE lesson right now. We'll do that for the next 30 minutes, and then we'll finish with the Three Amigos sesh. Yeah, I know. I didn't do any intro music. I felt D-Man finished with such a great session that it didn't warrant music. It just warranted some chat from me. I am recording this session for sure, for sure. Okay, so let's just dive right into it, shall we? Zero DTE options. Okay. Now you've done many zero DTE options this week. And what does, we'll keep this sort of, so as, as D-Man was asking his trivia questions, it took everything in me to not start listing off the questions that the captain asked the kid in Airplane. If you guys are old enough to know that movie, do you like gladiator movies? Do you know what it means when the dog rubs up and down on your leg? But it was a serious question and answer thing, and as many of you know, I like to try and throw in a little sarcasm from time to time, but I didn't think it was the right time. But is there ever a right time? There's always a perfect time. Uh, Steven, I thought you were yelling at me. I'm like, what? What did I do? You're answering somebody's question. Okay. Have you ever been to a Turkish prison? Yeah. And there's a couple more, but some of them are not appropriate for a public room. But it's a funny movie, and it was cracking me up. So a zero DTE option is simply an option that expires the same day. Okay, so when we talk about options, most companies like an Apple, a Tesla, Nvidia, any one of those kind of Mag Sevens or Costco, they all have weekly options. So they have options that expire at the end of each week, Friday of each week. Now, one thing we're talking here a lot is, what does OPEX mean? It's options expiration week, because all the other names that do trade options have a monthly option expiration, which also ties into the ones with weekly option expirations. It's that same Friday. It's the third Friday of each month. By the way, ABT's moving nicely, if anyone's playing that with me. And so my sniper strategy is strictly zero DTE, right? Because the SPY, the Qs, the XPX, the XSP, all of those have zero DTE options that expire every single day. Okay, so here's the SPY contracts, right? Option chain. You can see I'm currently in a SPY call long that's doing pretty well. That's the one I'm going to hit 100 on from D-Man, just to pad my stats a little bit so we can argue about it later. But these expire today. These expire in a little under an hour and a half, right? And then the very next expiration obviously would not be one day because of the weekend. So that's 3 days from now. Then 4 days from now, you can see that, right? So things like the SPY, the Qs, the XPX, they have IWM, they have daily 0 DTE options, which means you can trade them as a 0 DTE option every single day. Now on Fridays, you had the lotto session with Nate earlier, and the reason we all love a Friday for day trading is because most everything that we trade, most really liquid stocks, are 0 DTE options on a Friday. So you get a very low cost to control, 100 shares per contract, and you can get those sort of outsized moves, those 100 percenters that we've been hitting, etc. So that's why those are so much fun. Yes, 0 DTE definitely represents a day trade. So if you're going to do these kinds of trades, you either need to, and I check with your broker. There might be some that if you trade a spread, right? If you traded a spread and let it expire, and just do a cash expired XSP or SPX, that might actually not affect PDT because you're opening but you're not closing. But I'm not entirely 100% sure about that. If anybody else knows that answer, let me know. I've never had to play with it because I've always either had a cash account or one that has over 25K in it. So that's actually a good question that I don't yet know the answer to. But the strategy, this strategy works well on the sniper strategy. At least works well on a one day to expiration type of option, right? So basically, with that strategy, the sniper strategy, we're buying a call and or buying a put, calls to the upside, puts to the downside, with very little overall cost invested to capture the movement in a $580 stock, right? Which is why you can get these 100% sort of parabolic moves, and you're into a contract for a buck. What did I buy these at? At $1.80 per contract, right? You could just buy one, and your total investment is $182. But the problem with playing 0 DTE options is they can move pretty quickly in your favor to give you a high profitability, but they can also move pretty quickly in the opposite direction, and you can have 100% loser pretty quickly. Okay, so you have to have a tool that allows you to get in and out of trades quickly, and you have to know how to use that tool, option trades specifically. Okay, because you need to be able to set stops. If you need to be able to exit a position quickly if it starts to go against you, and or you get a big push up and you just need to exit that position. Okay, so if we buy a call, right, on a 0 DTE, we are expecting that the option is going to go up. That's pretty simple, right? If we buy a put, we are expecting that the underlying is going to go down and our option price is going to go up. Those are pretty simple from a 0 DTE style of sniper trade. Some other ways that I like to trade 0 DTEs are through credit spreads. Now, we'll talk a little bit about what that means, but that's selling the premium in the 0 DTE option and hoping that it expires. So in that case, you collect the money, and you want that option contract to expire worthless, and you get to keep that money. You become the seller of the option. Okay, so let's talk about theta. So when we talk about 0 DTE options, right? These options are going to expire. The ones I'm in currently on this sniper push right here, they are going to expire in an hour and 15 minutes. So what I'm fighting right now, I have a lot of intrinsic value because these are moving up. But what I am fighting is something called theta. Okay. And theta is really important to understand. It's so hard to write with a mouse, right? Theta, can anyone tell me what theta represents in an option? Time. Right. So when you buy an option that's a year out, you're buying that time. So let's say a $588 call in the SPY for a year out is going to be significantly more expensive than a $588 call for today by a lot. And we can even look that up, right? So if I pull over the option contract and I say, okay, right now, the 588s for today are 90 cents, right? Where are they? The 588s for a year from now, where are we? Can we go that far out? We'll go to January. No, we want January 26th, don't we? We'll go to January 26th. The 580, let's go the 585s are $47 per option contract, right? So you're buying that time because it gives you time to work. There's also other factors in that, but that's kind of how the options work. So if you become the seller of the option, then you're using time to your advantage, right? You want that theta to decay to happen rapidly, because right now, as it's going up, or if it's going sideways, and I'm in a call that's expiring today, it could be at the exact same price I bought it at, right? And now an hour later, it's worth significantly less because the theta has come out of it. Right? That's why people, as an option, even if you're playing weekly options and you get closer to expiration, you're like, it's gone up, but it's worth less. I don't understand. Well, that's because, theta or, you maybe bought that option in a high volatility environment when the VIX was super high, right? And then the VIX has come down, so that volatility, that pricing in the option also comes down, plus you've lost in theta. I'll do a whole options 101 lesson during next week's beginner sessions. It'll probably be the week after that because I'll do charting first and then an options 101. But we'll talk about theta, we'll talk about delta, we'll talk about gamma. But for this presentation, we're just we're just talking about theta. Okay? So theta in an option isn't a linear, it doesn't just drop straight down. Okay? What it does, I have a little graph here that I'll pull over. This is sort of how theta works on, let's say, a 90 days till expiration contract, right? At 90 days to expiration, the theta does not decay your option pricing that dramatically, okay? Within that 30-day window, 90 days to 60 days. 60 days to 30 days, it ramps down a little bit faster, right? In terms of decaying your option, your pricing in your option contract. And then where it ramps off really sharp is in the last 30 days. And most of the times, if we're playing a 30-minute chart or a 78-minute chart, we're in this period here, right? Yellow doesn't go well on white, but until actual option expiration where it goes to zero. Now, if we look at the data for a 0 DTE option, it has a similar but not as clean of an arc. So this is the data of 0 DTE options priced over a variety of days. So the red line is sort of the mean. And what we can see is at the beginning of the day, there's a very slow decline, and then you hit kind of this 2 o'clock time frame. And I know yellow's not the best choice for this. Let's do this. Hit this sort of 2 o'clock time frame, and from 2 o'clock on, you get this really steep ramp down where the theta is falling out of your option contract, right? And so if you're buying calls and buying puts into this latter part of the day, it has to be moving right away, right? Or you're just going to get destroyed on that theta decay drop. However, if you're selling the option contract, then that theta drop works in your favor, okay? And there's a couple of ways that I can do those as well. So, and you can use the sniper pivots to plan those. So if we take today, for instance, let's go to a slightly easier chart to just sort of view, right? We go today, if we wanted to play on a 2-minute chart, right? This sniper dip right here, then what we would be trying to do is once we see the signals, MACD cross, right? We get oversold here. It's not perfect, but I'm just trying to use this as an example. I would sell a put credit spread, okay, right here, which means I'd be selling, let's say the 583s and then buying the 582s behind it. And the way that works, I'm buying protection to the downside, so I can only lose so much. But all I need, this could just go sideways, right? And it would be, and I would still, yeah, did you hear that? And I would still be profitable. All that has to happen is this SPY needs to close above the 583 level at which I sold the option. It can close right here and I still make max profit, right? And if it closes up here, I would be out of it already because it would already be pretty much at max profit. Can you hold on a second, please? Sorry, just needed to check that wasn't something important. Beer delivery, I know, right? Let me flip over here real quick just to make sure. I'm close to being able to brag here. God, I'm so close. Let's keep going. So you can sell a credit spread, and depending on where you sell it, like on the SPX, let's say, if you make this turn and you sell one slightly above and you buy one at or slightly below, for one contract, it's going to cost you about $250, or you're going to collect $250, and your max risk is going to be about $250, right? So you've capped your risk, but you've also capped your upside, okay? And then you want theta to work in your favor. So as long as this gets closer to the end of the day and stays above your level, you're going to be in max profit. And the same works in reverse. You can sell a call credit spread here. You're going to sell the lower one, and then you're going to buy the one behind it for protection. And then all you need is for the SPY or SPX or whatever you're playing to close somewhere below the level in which you sold it. Okay, and so you can do these every day, and not always profitable because not every trade works in your favor. I have an automated system that I play around with that every day at 10:30, if we're up on the day from open, it'll sell a call credit spread. If we're down on the day from open, it'll sell a put credit spread. It does it automatically. Because we usually get, what time is this? Right here, 10:30. You can see on this chart, if I should go check it, the 10:30 call credit spread right here would have done it kind of right at the money, right at 1030, which is about right there, which would mean we're getting pretty close, but I would still be at max profit, right? I would need to take it off down here, and it's through another system, so I haven't looked at it at the moment. And then I could have sold another one here, right? A put credit spread, and taking that off into this, and you can play these ranges. Okay. And then finally, which I have some videos on and I'll do a lesson on, if it looks like we're going to range for the day and just stay in a range, that you can sell two different things. One is called an iron condor, which automatically sells a call credit spread and a put credit spread. So you do it like 20 wide, right? And all you have to do is close in between those two brackets for max profit. And you can sell these every day, right? And capture that theta decay. Obviously, the trade doesn't work if it starts to work outside of those two ranges, but basically you're boxing this in, right? Or there's another one where the risk reward is fantastic, but you really have to pin the timing on it, which is, and I've played around with selling them at different times. So let's say it's a 10 o'clock, which would have been about right here. So if I draw a line, this is what's called a iron condor. Okay, so let me just put two lines there. Okay, so right at a certain time or at a certain price, you would sell both a call and a put at the exact same strike. Okay, you would sell both of those, and then you would buy the wings. It's like a butterfly. That's why it's called an iron butterfly. You'd buy the wings all in one purchase. And then usually the risk reward on this kind of a thing, let's say on the SPX, I believe is, like a lot of times I'll see you'll get a $1,500 credit, right? And so that's your max profit. And then the max risk for that is, $350, right? And you get this max credit if it pins. So if this were to roll up and then close right at where you sold both the call and the put, then you get max profit, which doesn't happen very often. But the profit angle kind of looks like this. If you've ever looked at so if it closes here, you're gonna make I don't know, $700. If it closes close to this, you're probably only going to make $200 or $300. But then it kind of gives you a range, and every once in a while you can pin it and make the max. So there's a bunch of different ways to play a 0 DTE option other than just standard calls and puts, right? And using that theta decay to your advantage, especially in a 0 DTE environment, is a really cool way to play them. And especially with like a credit spread, you're basically capping your total downside risk, right? You're also capping your upside risk, but it's not like you're gonna put one on and you're gonna lose $1,000 because you're maxed at $250 or whatever the risk reward was of where you put them on. Does anybody have any questions on that? I know that's like a 30-minute lesson on 0 DTE and the different kind of ways to play it. I like playing with them both. I find that the iron condors are kind of the easiest to put on. Yes, this was taped and I'll post it up. And I have a bunch of other videos on this kind of a thing. And I'll do more, next week and, into the next, this next year, because I'm adding more of that kind of trading to my 0 DTE style. All right, D-Man, I'm not going to get my 100%. So you win. I'm taking this off here, but I've still got, what, 70%? Do I want to hold it for a little bit longer? I don't know. It is bragging rights. Bragging rights is really important, especially between me and D-Man. Yeah, I also do 0 DTEs on SPX. I like doing, like in the room, doing SPY because it's less expensive and people can, if I'm trading 10 of them or 5 of them, somebody else in the room can trade the exact same one they can trade 1 or 2 and have the same, entry price and same percentage win versus if I'm playing SPX, it's a little bit, it's different. I mean, the price is obviously more expensive, but then so is the actual strike price. They're just slightly, I mean, it's obviously 10 to 1, but if 58.77 is not really where the SPX is right now, right? It's 589, right? 5,893. So it's just easier for people in the room to understand what I'm doing. But if I was trading on my own, I would probably be primarily SPX. Yeah, margin requirements for spreads are just you basically have to have the cash in your account to cover the max loss. And so if you're playing a spread and your max loss is $250 on an SPX spread, that's all you have to have in margin. So they're pretty easy for people that do either trade with limited margin or trade a cash account. But for spreads, you have to have a level 2 option. Y'all, that is my time. I want to make way for the Three Amigos session. It's a fun session, and so I'm gonna jump off. I know we're gonna set that up, so just give us a minute or two to get us all on the same line before we come back on the mic. But jump in here for next week. We're gonna be doing a ton of trainings next week. Have a little bit more time to answer all the questions that you guys are throwing in here that I can see, but I just don't have time to answer, right? So I really hope that you guys take advantage of this and take advantage of the beginner trading sessions we're going to be doing next week. I've had a blast in here with you guys this week. It's been a great week of trading in a rough environment. But we've made some great trades this week, and I've seen a lot of you members hitting great trades. So, would you want me to share this chart, Anthony? I'll share it as I jump off here. Okay. I will talk to you all in the Three Amigos sesh.